Hey folks, today we're diving into a major shakeup in the global trade landscape that has the financial world buzzing. President Trump just announced a 90-day freeze on tariffs for dozens of countries, and it's causing quite a stir. This unexpected move comes on the heels of some intense market turbulence, the kind we haven't seen since the early days of the COVID-19 pandemic. Just yesterday, heavy new tariffs kicked in, causing a frenzy that wiped out trillions from stock markets. But with this freeze, U.S. stock indexes are soaring higher, and the optimism is spreading to Asian and European markets. So, what exactly happened? President Trump decided to hit the brakes on imposing hefty duties on multiple trading partners, a decision that brought a sigh of relief from European leaders and investors alike. However, don't think this means a full retreat. Trump doubled down on China, raising tariffs on Chinese imports from 104% to a staggering 125%. China, as you might expect, isn't taking this lying down. Beijing has made it clear that they won't be pushed around, with Commerce Ministry spokesperson He Yong-hyun stating they'll follow through to the end if the U.S. insists on its path. And let's not forget, China had already slapped 84% tariffs on U.S. imports in response to Trump's initial salvo. Financial analysts are keeping a close eye on this. Goldman Sachs has already revised its forecast for China's GDP growth down to 4% from 4.5%, citing the negative impacts of these tariffs. The Chinese yuan also hit its lowest against the dollar since the global financial crisis. Across the pond, European markets are breathing a little easier. Eurozone government bond yields jumped, and markets adjusted their expectations for European Central Bank rate cuts. European shares surged, with European Commission President Ursula von der Leyen calling Trump's move an important step towards stabilizing the global economy. However, let's not get too comfortable. Central bankers and analysts are urging caution. European Central Bank policymaker François Villeroy de Gaulle noted that while the news is less bad, uncertainty still poses a threat to trust and growth. It's also important to note that Trump's tariff reversal isn't absolute. A 10% blanket duty on almost all U.S. imports remains in effect. This pause doesn't affect duties on autos, steel, and aluminum already in place. Plus, Canada and Mexico are still subject to 25% fentanyl-related tariffs if they don't comply with the U.S.-Mexico-Canada trade agreement's rules. U.S. consumers might feel the pinch too. Some economists warn that higher prices on everything from sportswear to wine could be on the horizon. Since Trump's inauguration, shoe sales are down by 9.5% in stores. Meanwhile, companies like Apple are making moves to sidestep tariffs, chartering cargo flights to ferry iPhones from India to the US and Europe. The impact is being felt as well. Volkswagen reported a sharp drop in first-quarter earnings, attributing part of the plunge to US tariffs. So there you have it. The global trade landscape is shifting rapidly, and investors are watching closely. Keep an eye on this space, folks. Until next time, stay informed and stay savvy.